You're welcome back, guys. My name is Da Mola. So in this video, I want to talk about martingale layering, and one of the importance of this concept is that it helps you to manage your risk. It helps you in risk management or money management, as some people might call it. So for starters, you need to choose the right lot sizes. Okay, so let's say you have like $200 in your equity in your account. You can use 0.10 lots, as it is in between low and mid risk. So if you are looking to know what lot size you are supposed to use, in corresponding to your capital, you can just, this is it. So if you have, let's say, $50 capital, using 0.1 lots, it's a higher risk. The mid risk is about 0.05, then your low risk is 0.01. So the list goes on and on. You can check this, you can find this money lot sizing tips on the Signal 28 education channel. All right, so let's proceed. So yeah, I was talking about the martingale strategy, or the martingale layering. Okay, so the martingale layering, like I said earlier, it helps you to manage your capital. It helps you to maximize your profit potentials, and also help you to secure your capital. That's what it does basically. Yeah, so for example, once the signal is out, or you want to enter a position, it's better to have it planned. You need to predetermine what you want to do. Let's take, for example, you have a $200 capital, and you should have in your risk profile, you should you should have a predetermined lot size that you're going to use for the account. Okay, so let's say you received a signal that says buy GBP USD at 1.250 and all of that. Now, in respect to your capital, you really want to know what lot size you want to use. Okay, so let's say we have a $200 capital, right? And you want to, for one position, or for your trading, you want to make use of 0.1 lot. Okay, so now layering will help you to minimize your risk. It will help you to manage your risk, in a sense that once you enter a position, you are not expect, since you want to use 0.1 lot, you are not expected to enter the position or the trade with 0.1 lot. Layering would help you to enter into it, to help you to enter your trades intermittently. It will help you to enter your trade bit by bit, so that way you can maximize your profit potential. So I'm still going to talk more about that. Okay, so let me just go to the chart, and so that you guys will have a little bit of what I'm talking about. Yeah, for this signal, for example, let's say you have a signal which says buy GBP USD at 1.25026. So let's go to the chart. Let's see what it looks like. So let's say you have a signal that says you should buy at somewhere here 152 1.25026, somewhere at this point. Okay, let me increase this. Okay, let's say you are told to buy somewhere at this region, 150 1.25026, somewhere at this region. Then you entered for a buy. So instead of you entering the first position with 0.1 lot, what you want to do is you start from the lowest lot. So if I'm to enter this trade, I would rather just enter this position with 0.01 lots. Okay, so I'll enter a buy with 0.01 lots. Okay, so if the position should move, because it's supposed to be a buy And if the trade goes below my first entry of 0.01 position, at some point, maybe 5 pips or 10 pips below, or let's say 5 pips below, I'm going to enter another position somewhere lower than the previous position. So I'm going to enter 0.02 at 5 pips below. So if the price should continue going lower, then I'm still going to enter another position, the third position, which is 0.03. Then if it keeps going lower, then I'll enter 0.04. So that way you can manage your losses. Okay, so that way, even if the trade goes against you, you're not going to run into a total loss. Okay, compared to when you enter the 0.1 lot all at once in a single position. Okay, so that's what I was trying to explain here. Okay, it says when the price is floating negative 5 to 10 pips from the entry point, so you can enter like 5 pips below from the entry point since our signal says buy. Okay, so yes, so that's what we'll keep doing then till you get to, probably if the price still keeps going down, till you get to maybe 0.5 or 0.9 as the case may be. So that way, when price starts to reverse, you will notice that before it gets to your first entry of 0.01, you would have been in a good amount of profits. Okay, so by the time the price goes back, starts to reverse to your entry point, you would have been in profits. Okay, so that's just basically the idea of layering. Instead of entering all your position, entering a bigger lot all at once, it's important and it's smart for you to enter your positions in layers. Okay, in layers. And when the price starts to go in your own direction, in the direction that you predetermined, you're going to be in good profits. Okay, so thank you. If you have any questions, let me know in the comment section. I'll see you guys on the next one. Peace.